Hello students, in our previous lecture we are solve a practical problem on computation of income from salary or taxable income from salary. Okay, in our today's lecture we are going to solve a practical problem number 4 on computation of total taxable income from salary. Okay, so here problem number 4 is given. Mr. Deshpande is employed in Cipla Limited Company, Delhi. His emoluments are as under. So Mr. Deshpande is worked in Cipla Limited Company at Delhi, and his details of salary is given as under. Okay. So here particulars and rupees, two columns are given. Okay. In particulars, basic salary amounted to rupees 1000 per month. So basic salary is received by Mr. Deshpande from his employer amounted to rupees 1000 per month. Okay, 1000 per month. Then city compensatory allowance CCA 100 per month. Okay, then DA into bracket 60% consider for retirement benefit. So this statement is very important while computing the salary for different purposes. Okay, so this statement is very important for computing the salary for different purposes. Got it? So DA rupees 1000 per month, then house rent allowance rupees 2000 per month, and Mr. Deshpande pays rent for a house situated in Delhi amounted rupees 3000. Got it? So actually HRA received 2000 and rent paid by the SSC and house is situated at New Delhi, sorry, in Delhi, not New Delhi, in Delhi. So here amounted rupees 3000. So he pays a rent of house situated in Delhi amounted rupees 3000. Then children education allowance for 3 children. Okay, for 3 children. So make a star in front of children education because this allowances is partly exempted and partly taxable. So we have to remember the partly taxable and partly exempted allowances. Okay, so children education allowance amounted rupees 120 per month. Then hostel allowance, so hostel allowance is also partly taxable and partly exempted. Hostel allowance for two children amounted rupees 700 per month. Okay, so hostel allowance 700 per month for 2 children. Then medical allowance, so medical allowance is given 16,000 per annum, so it is a allowance, taxable allowance. Then here he has also provided the facility of watchman, sweeper and gardener, and the employer pays wages at rupees 1000 per month each said person. So the employer has provided the facility to the employee of watchman, sweeper and gardener. Okay, and salary of that 3 person is paid by employee amounted to rupees 1000 each person. Okay, so here 1000 per month for watchman, 1000 per month for sweeper and 1000 per month for gardener. Okay, so this perquisite is taxable. What it is a perquisite facility provided by the employer to the employee of watchman, sweeper and gardener. Then second perquisite is he has also been provided with a motor car of 1400 cc engine cubic capacity with driver which he uses partly for official and partly for personal purpose. So employer has provided a motor car to the employee and the car cubic capacity is 1400. It means 1.4 cc or 1.4% 1.4 cubic capacity engine car is provided by the employer to the employee. Okay, so here we compute the valuation of motor car facility, and the car is used for both official and private purpose plus driver's salary. Okay, so driver is also provided with car. Okay, so we compute a motor car facility perquisite or valuation of motor car if motor car is below 1.6 cc. Okay, so motor car is below 1.6 cc, then we compute a motor car as 1800 per month plus 900 per month for driver's salary. Okay, we already studied this perquisite, that is valuation of motor car facility. Okay, in last lecture we already studied, but in last lecture, in last problem, we are compute a motor car facility and the car cubic capacity is above 1.6 cc. Okay, here we compute a motor car uh, perquisite and car cubic capacity is below 1.6 cc, so that we taken into consideration 1800 per month plus 900 driver's salary. Okay, because the car is used for partly office purpose and partly personal purpose. Got it? So situation is very important. Car used for office purpose, then all perquisites are exempted. Car is used for private purpose, then actual expenditure incurred minus 10% depreciation. Okay, we add in the maintenance. Okay, and if the car is used for partly office and partly uh, private purpose, then we compute a 1800 per month if car cubic capacity is below 1.6 cc plus 900 per month driver's salary. Got it? Then next one is his professional tax is paid by the employer 3000. Okay, so Mr. Deshpande's professional tax is paid by the employer. So the tax treatment for professional tax is very important. So here, if the employer is paid professional tax of his employee, then we add this professional tax in gross salary and then we deduct this professional tax from a deduction under section 16 subsection 3. Okay, then he contributes 600 per month. Okay, he contributes 600 per month to RPF, to which his employer contribute equal amount. So employee contribution is not taken into consideration in the gross salary. Got it? Employee's contribution to RPF is not taken into consideration in gross salary. Okay, but employer's contribution is included in the gross salary of the SEC. Okay, so here the employer has contributed equal amount. Equal amount means rupees 600. Okay, equal amount of SSC. Okay, SSC contribute, or the Mr. Deshpande has contributed 600 per month to the recognized provident fund. So equal amount, that is 600, is contributed by the employer also to the provident fund of the SEC. Okay, so here we taken into consideration only 600 per month, and we already know that if the employer contribute to the recognized provident fund of the SEC, then the employer cannot contribute more than 12% of salary, okay, to recognize provident fund. Got it? We already studied the tax treatment for provident fund, recognized provident fund. Okay, so remember the tax treatment for provident fund, recognized provident fund, unrecognized provident fund, public provident fund. Okay, then interest at 11% per annum amounted to rupees 22,000 was credited to his RPF for the year ending 31st March 2020. So interest is credited to the recognized provident fund at 11% per annum amounting to rupees 22,000, okay, to RPF, okay, for the year ending 31st March 2020. So remember the tax treatment for RPF. Okay, so here tax treatment says that if interest credited to the RPF, it is exempted up to 9.5%. Okay, if interest credited more than 9.5%, then it is taxable. So here interest credited to the RPF of the SEC is 11%. It means up to 9.5% we get exemption, and above 9.5% amount is taxable. Okay, so here we read the problem carefully. Now we find out a taxable salary. So basic salary is taxable. Okay, it is taxable. Basic salary fully taxable. City compensatory allowance is fully taxable. We already studied the fully taxable allowance. Okay, tax. DA fully taxable. Okay, then HRA. So HRA we have to compute a exempted HRA. So it is a partly taxable and partly exempted. Okay, so partly tax. Okay, partly tax. Then children education, it is also a partly taxable, partly tax. Okay, partly tax on children education allowance. Then hostel allowance. So hostel allowance is also partly taxable, partly tax. Medical allowance fully taxable, medical allowance fully taxable. Then here perquisite. Okay, perquisite, the employer provided a facility of watchman, sweeper and gardener to the employee, and wages of these three person is paid by employer, not employee. Okay, so employer is paid a wages to the facility provided to assessee or employee, then it is taxable. So this perquisite fully taxable, this perquisite is fully taxable. Okay, tax. Okay, then motor car. Okay, so motor car, valuation of perquisite, valuation of motor car, and then we decide the taxable value of motor car. Okay, valuation of motor car. Then it is add in, it is first of all add in gross add in gross salary, and then gross salary, and then deducted under section 16 subsection 3 from gross salary, from gross salary. Got it? So here first of all we add a professional tax in gross salary and then deduct under section 16 subsection 3 from gross salary. Then employer's contribution. So employer's contribution is taken into consideration. It is up to, it means partly taxable, partly exempted. Okay, partly taxable, partly tax. Okay, so here employer contribution is exempted up to 12%, so we have to compute a 12% on salary. Then 11%, so it is also a partly taxable and partly exempted, partly taxable. Okay, now we compute easily a income from salary. Here solution, then computation of taxable income from salary. Okay, name of assessee is given Mr. Deshpande worked at Delhi. Okay, then assessment year, assessment year 2020-21, previous year 2019-20. Then make a 3 column or prepare a 3 column particulars rupees. So here we prepare a 3 column, that is particulars rupees. Particulars rupees and rupees. Okay, so here first point, that is basic salary. Now we compute a salary. Okay, so salary includes basic salary. Okay, basic salary or basic pay So basic pay is given, that is 1000 per month. Okay, so here basic pay is given for a month. Okay, a month means 1 month. We compute a salary for whole year, so basic salary for 12 months. So here 1000 multiplied by 12, we get a salary for 12 months or basic salary for 12 months. So 1000 multiplied by 12, here 1000 multiplied by 12, 1000 plus multiplied by 12, here we get 12,000. Then next one is city compensatory allowance. City compensatory allowance is rupees 100 per month. Okay, city compensatory allowance is 100 per month. All are taxable. So here 100 multiplied by 12, we get a we get a 1200. Then next is DA. DA means dearness allowance. Dearness allowance is 1000 per month, and 1000 multiplied by 12. Okay, 1000 multiplied by 12, and 60% consider for DA. 60% consider for retirement benefit. Okay, 60% consider for retirement benefit. Okay, 60% consider for retirement benefit. So here amounted rupees 12,000. 1000 multiplied by 12, we get a 12,000 amount. Then next house rent allowance. Okay, so house rent allowance is important. First of all, actual house rent received. Okay, house rent allowance, house rent allowance received. So received in inner column, because it is a partly taxable and partly exempted. We have to compute exempted HRA. So here HRA received for a month amounted rupees 2000. Okay, here amounted rupees 2000 per month, amounted rupees 2000 per month. Amounted to rupees 2000 per month. So 2000 per month means 2000 multiplied by 12, we get a 24,000 less exempted HRA. So we have to compute exempted HRA, that is working note first, that is computation of exempted HRA. First of all, we find out a salary for the purpose of computation of exempted HRA. So first of all, compute a salary. So salary is equal to, in simple way we compute a salary for preparing two columns. Okay, for preparing a two columns, here particulars rupees, then salary is equal to basic salary or basic pay. Here basic pay is equal to salary is equal to basic pay. Here basic pay is rupees 12,000 plus we add plus DA consider for plus DA consider for retirement benefit plus DA 60%. Okay, 60% consider for retirement benefit. Got it? 60% consider for retirement benefit. So only 60% is the taken into consideration. So here that is the DA. We have to compute a total DA, that is 12,000 is the DA. Okay, so 60% on 12,000, so 12,000 multiplied by 60 divided by 100. Okay, 12,000 divided by, that is 12,000 divided by 60. So here 7,200. Okay, so 12 into 6, 7,200. Then we add here percentage of commission on sales or turnover. So percentage of commission on sales is not given, so here in amounting column is nil. Okay, now make a total of outer column. We get a salary for the purpose of HRA. So here salary for the purpose of HRA is rupees 1 lakh, sorry, here 19,200. Okay, so here 19,200 is the salary for HRA. Got it? Salary for HRA is rupees 19,200. Okay, 19,200. Okay, now we compute a exempted HRA. So here exempted HRA, prepare a again 3 column, that is particulars rupees. Okay, particulars rupees. Okay, particulars rupees and rupees. Okay, now here first point are exempted HRA. HRA is minimum of the following three. So here first point is, that is actual HRA received. So actually HRA received is rupees. We already taken into consideration the actually HRA received. Okay, so actual HRA received, that is 2,000 into 12 is equal to 24,000. Got it? 24,000 here. Actually HRE received 24,000. Got it? Then second one is rent paid. So rent paid by the SAC is rupees 3,000 per month into 12. So here rent paid by the SAC is rupees 3,000. Okay, which is given in the problem here. Rent paid by SAC house situated in Delhi amounted to rupees 3,000. Got it? Amounted to rupees 3,000 per month. So we compute a rent paid by the SAC, that is 36,000 less we deduct a 10% of salary. So 10% of salary, that is 10% on. So here 19,200 into 10 divided by 100, we get a amount is equal to 1920. 1920. Got it? So 10% on 19,000, that is 1920. Deduct the 1920 from 36,000. So 36,000 minus 1920, we get 34,000 34,080. And third point is that is 40 or 50% of salary. 40% of salary in case the SAC is worked in 40% of salary for SAC if SAC worked in other than metro cities. Okay, other than metro cities. So city includes Hyderabad, Pune, Satara, Sangli, Kolhapur, okay, etc. Okay, and 50% of salary if the employee or the SEC worked in a metro city. Metro city includes 4 cities, that is Mumbai, Chennai, Kolkata and Delhi. So here we taken into consideration the 50% of salary. 50% of salary. So we already compute that the salary. So 50% on salary is equal to 19,200 into 50 divided by 100. We get a 50% of salary, that is 9,600. Okay, so here we get now those value which are lower, those value which are minimum are a exempted HRA. So here 9,600 is the lowest value. 9,600. Okay, so here here 9,600 is the lowest value here whichever is lower. So here whichever is less. Okay, whichever is less, whichever is less is the exempted HRA. Whichever is less is exempted HRA. Got it? Whichever is less is exempted HRA. So here less is 9,600. 9,600. Okay, so 9,600 is exempted HRA. Here exempted HRA. Okay, so very easy to compute. Just remember the calculation or computation of HRA. Okay, so here exempted HRA is 9,600. So deduct this 9,600 from actual HRA received. So here 9,600 is exemption. Okay, 9,600 is exemption. So 9,600 minus 24,000, sorry, 24,000 minus 9,600. Here taxable HRA is 14,400. 14,400 is taxable HRA. Then next allowance is that is children education allowance, and children education allowance is received for 3 children. So first of all, received for 3 children. So here education allowance received for 3 children amounted to rupees 120 per month. Okay, here for 3 children amounted to rupees 120 per month. So here actually education allowance received into bracket 120 per month. So we compute for yearly. Okay, multiplied by 12, multiplied by how many children's? 3 children's. Okay, for 3 children's. So here amount is in inner column, that is amounted to rupees 1,440. Okay, that is 1,440 is the actual education allowance received minus less exemption. So exemption is given to the education allowance is rupees 100 per month per child, maximum 2 children's. Okay, so exemption is allowed only for 2 children's. Got it? Amounted rupees 100 per month. So here 100 per month, 100 per month, 100 multiplied by 12, we compute a yearly. Okay, here we taken into consideration a yearly education allowance. So we deduct the yearly exemption. Okay, so we convert the monthly salary into yearly salary or per annum salary. So exemption is 100 per month. It means for 12 months how much amount is exempted from education allowance. Okay, so 100 multiplied by 12 multiplied by 2, because the education allowance is allowed for only two childrens. So here 100 multiplied by 12 multiplied by 2, we get a 960. Here we get a exemption, that is 960. So deduct the 960 from, deduct 950 from education allowance or actual education allowance, that is 1400, 1000, 1440. So here remaining balance is taxable, and that is 480 is the taxable balance. Got it? Then next that is next allowance is hostel allowance. Okay, hostel allowance is also partly taxable and partly exempted. Okay, so here hostel allowance hostel allowance for two children. So here amounted rupees hostel allowance for two children. Okay, hostel allowance for two children. Okay, hostel allowance for two children amounted rupees 700 per month. Okay, so compute a 700 per month, so compute for yearly. Okay, so convert the hostel allowance in year. Okay, so here 700 is per month per child. Okay, 700 hostel allowance, so 700 into 12. Okay, here per child is not given. Okay, so here only says that hostel allowance for two children amounted to rupees 700 per month. It means for two children the assessee get 700 per month. It means for each children he gets 350 hostel allowance per month. Got it? So here 700 multiplied by 12, we get a figure, and that figure is in outer column. That is 700 multiplied by 12, we get a amount, that is 8400. 8400, then less exemption. Okay, so exemption is, or hostel allowance is exempted rupees 300 per month multiplied by 12 per child, maximum two children per child, maximum two children. So 300 multiplied by 12 multiplied by 2. Okay, so hostel allowance is also exempted for two childrens only. More than two childrens it is disallowed. Got it? So here amounted rupees 7200, and remaining balance is taxable, amounted to rupees 1200 is the taxable hostel allowance. Then taxable hostel allowance. Okay, then next one is here hostel allowance is taken into consideration. Next one is medical allowance. So medical allowance all are taxable. Okay, because the medical allowance is not spent by the SEC. Okay, if spent or medical treatment is taken by the SSC for self, for spouse, for children, then it is a tax treatment, or then it is the medical treatment is deducted from the medical allowance. But here medical allowance is not spent by the SEC, so it is taxable. So medical allowance received by the SEC amounted to rupees 16,000 per annum. Okay, per annum, it is very important. Okay, here per annum means per year. Okay, and per month means per month means a month, for a month. Okay, so we compute yearly salary, so we convert these monthly emoluments into yearly emoluments. Got it? Next one is medical allowance. Then next is a perquisite. So the perquisite is taxable. Okay, it means employer has paid a wages to watchman, sweeper and gardeners, and the facility is provided to the employee. So here salary, wages, here into bracket, here first point is, that is facility provided by employer. Okay, it includes wages to watchman. Okay, wages to watchman, per month salary 1000 multiplied by 12. So here the salary is paid to watchman by the employer is rupees 12,000. Then next facility is, okay, here wages to sweeper into bracket 1000 per month each said person. Okay, each said person. So here 12,000 here 12,000 and wages to gardener 1000 multiplied by 12 amounted to rupees 12,000. Then next motor car. Okay, so valuation of motor cars is very important. Valuation of motor car is very important. Then working note number second, working note number second, that is valuation of motor car facility. Okay, so first point is that is car is situation, that is car is owned by the employer. Okay, owned by the employer and expenses paid by employer. Okay, here in problem says that the car expenses. Okay, here he has also provided, it means employer has also provided the motor car to the SAC. A cubic capacity of the car is 1400 cc with a driver. So here we consider that the car is owned by the employer and expenses is paid by the employer. Got it? And car is used for official and private purpose, partly official and partly private purpose. So remember this, car is owned by employer and expenses paid by employer. Second situation is the purpose of car, that is purpose means the car is used for, car is used for both official and private purpose. Okay, private purpose, both official and private purpose. Got it? Then third, that is car capacity, that is cc, cubic capacity of car, cubic capacity of car. So cubic capacity of the car is 1400 cc. That is car cc is below 1.6 cc. Got it? 1600 cc. Third point. Then fourth point is valuation. Okay, so valuation of motor car, if car is owned by employer and expenses is paid by employer. Okay, and car is used for both official and private purpose. We already studied this perquisite. Okay, but here only taken into consideration the cubic capacity of the car. Okay, so car is used for both official and private purpose and cubic capacity of car is below 1.6 cc. Then we compute a motor car, or valuation of motor car is equal to 1800 per month. Okay, so multiplied by 12 plus driver is also provided. So here we forgot the driver, so here driver is also provided. Okay, so 1800 car plus 900 per month, into bracket driver. Okay, so here 1800 per month, so convert 1800 into a yearly. Okay, yearly value of motor car is 1800 per month plus 900 per month. So here is equal to here is equal to, so motor car, value of motor car is equal to is equal to 21,600 plus 10,800 is equal to value of motor car 32,400. Here we get a valuation of car, that is 32,400. So this 32,400 is the value of motor car, and add this value in the salary of the SAC, salary of the SAC. Okay, so here motor car facility, and value of motor car facility is 32,400. okay, 32,400. Then next one is, that is here professional tax. Professional tax is considered here, okay, because the professional tax is paid by the employer, so we add this tax in gross salary, then we deduct. Okay, so professional tax paid by employer, okay, amounted rupees 3,000. okay, amounted rupees 3,000. Then next professional tax, then next employer contribution. So here next one is employer contribution to RPF. okay, so here 600 per month, so 600 multiplied by 12 is equal to 7,200. okay, so it is exempted 7,200 less exemption up to 12%. okay, up to 12% of salary. okay, so 12% salary we already compute for HRA, so same salary is applicable for computation of exempted recognized provident fund. So here we compute a salary, that is 19,200 multiplied by 12 divided by 100. So exemption is here 19,200 multiplied by 12%, that is 2,304. okay, so here exemption is exemption is 2,304. got it, 2,304. And the taxable amount is and the taxable amount is 7,200 minus 2,304. 2,304, that is taxable contribution of rupees 4,896. okay, 4,896. Then next one is interest. okay, last one is interest. So interest credited, so here interest, here interest here interest credited to RPF at the rate 11% amounted to rupees, inner column, that is 22,000 rupees less exemption up to 9.5%. okay, 9.5%, that is 22,000 multiplied by 9.5 divided by 11. Here the answer is 19,000. okay, so deduct the 19,000, remaining balance is taxable. So taxable balance is 3,000. okay, taxable balance is 3,000. got it? Taxable balance is 3,000. okay, taxable balance is 3,000. here taxable balance is 3,000. now make the total of inner column. okay, sorry, make the total of outer column for finding out the gross salary. okay, we taken into consideration the inner columns amount. now make the total of outer column, that is 12,000 plus 1,200 plus 12,000 plus 14,400 plus 480 plus 480 plus 1,200 plus 16,000 plus 12,000 plus 12,000 plus 12,000 plus 12,000. okay, then plus 32,400 plus 3,000 plus 4,896 plus 3,000 plus 3,000. so here total is equal to 1,36,576, and that total is called a gross salary. Now we get a deduction less deductions under section 16. okay, so we already studied the deduction under 16, that is standard deduction under section 16 subsection IA. okay, here amounted rupees, that is fixed the deduction under section 16 first A. okay, not IA, first A, that is 50,000. then next one is entertainment allowance. so entertainment allowance is under section 16 subsection 2, and entertainment allowance is allowed for deduction to government employee. Private sector employee it is not allowed. Then professional tax under section 16 subsection 3. okay, so professional tax is rupees 3,000. now total deduction is total deduction is 53,000. Total deduction is 53,000. Deduct the 53,000 from gross salary, that is 1,36,576 minus 53,000. We get a 83,000 83,500 83,576 is the taxable income from salary. Okay, got it? So very easy. Remember the partly taxable, partly exempted allowances, fully taxable allowances, valuation of perquisite, taxable perquisite and exempted perquisite. You can easily compute a income from salary. So income from salary is 83,576. In our next lecture we are solve a last problem on this topic, that is computation of income from salary, problem number 5th. Okay, thank you very much.